Alright, what's up guys? This is Taylor doing the nightly video for February 5th, and we have the markets pulling back here this week. If we pull up the Nasdaq futures, which I happen to think are the problem child here in the market, we've been caught in a daily squeeze going back to, and this might be a record for a daily squeeze, caught here since the 18th of December. And you have all your typical back and squeeze, typical squeeze back and forth up here at the upper extension, down towards the bottom extension. And we're up and we're down, we're up, we're down, and now on the break here, looking like room for what could be a bit more downside here in the short term. I think the only way out would be a very quick move back above. I mean, the bulls can buy themselves maybe a little bit of breathing room back above 25K NQ, which would be your weekly 21 EMA. But even a pop back above that level, I don't think would change all the issues piling up here in the short term. So what I think could be a little bit more likely is if they cannot get back through that key level, in the short term, there could be room for a move down to about 24K. We have a couple different levels down there. You have the 200 SMA off the daily time frame. Could be a bit of a spot for at least a dead cat bounce. You have the November low, which put in a decent bottom, and then for that weekly squeeze, 2400 would line up with the that bottom Keltner channel extension. And a few really important observations here. Good example I think being Nvidia. Nvidia's been trapped going back to about November here. And a couple of things on the indicator. We have overall really good structure. EMAs are stacked positively, 21 above the 50, 50 above our 200. The issue we've had here going back to November, that MACD line crossing back below zero. So if you guys want to go to, you could go to Thinkorswim, most platforms, go grab a free MACD. And we'll grab our MACD here, and the settings I use for my squeeze indicator, all the indicators, right, would be the MACD, and then for settings here, y'all can take a screenshot or something. But I do a fast length of 24, a slow length of 52, MACD length of 9, average type of exponential. So 24, 52, 9 on the MACD. Take that, put it on your chart, and that MACD line crosses negative on Nvidia. Again, back here, end of November. And what can happen is in the context of an overall uptrend, good structure, and a brand new weekly squeeze, when you've lost momentum, things can get very much... you can just get very much trapped in that compression pattern. Flush down towards -1, rally back towards +1, fade back to 21 EMA, back up towards the extension, back down. It's a lot of glorified back and forth, and they'll eventually go on to figure out, do they want to break it short for a flush down towards 140, break it long for a path into 220. The point I'm really trying to make here, that pattern can make for, in the short term, a lot of ugly back and forth wide range chop. So the Qs here, I would argue, look pretty similar. We have a weekly squeeze setting up. We have good structure. It's actually mostly bullish. The only bearish thing about it, the MACD line having crossed back below zero. That doesn't mean the QQQ will go out and die from here, get crushed. Doesn't mean the squeeze breaks short. But at a minimum, very normal action would be we're hanging out between, NQ 26K, NQ 24K. The good old weekly squeeze dance, +1, -1, and then down the road we'll figure out, could they take that and break it short, turn the corner, break it long? That, I think, is a conversation for further down the road. Short-term thinking, mark up that 25K level underneath it. I think it's going to be an easier short, and the kind of short I'm looking for is more so not a big, crazy-sized trade, taking puts to bed. It's a little bit more the... one I took here on the Nasdaq earlier this morning on the 1 hour chart. To me, a good trade for the market. 1 hour squeeze, got the red arrow down here on the histogram for a short trigger. Jumped in, got short under the 21 EMA, exit above the 50. And then took profit right around that 750-ish. I'm in, I'm out, and I got my $1,000. But why short the QQQ? Why not buy it? Why not short the IWM? Why day trade? Right, and that all comes from the ranking system here. And I did want to mention a couple of things, guys. I know for a lot of you who have this, you're kind of in tune with it every day, of course. You're in the room, you're in tune with it. for you guys and gals watching the YouTube videos here, I think really important to keep in mind, this is all live data. The rankings can change every single day, so my goal is find the current theme, work that theme, get my piece. As soon as that theme changes, I move on to a greener pasture. So a good example of this is I showed you guys back in September. So here's our September 25th rankings. The theme back there being relative strength in, let's go to November 25th. Okay, sorry about that, not November. One theme, one idea I brought you guys back in September was Tesla. And we had a much better market compared to the current market. Market is overall bullish, index is bullish, Big 10 basket in great shape. And then down here within that Big 10 basket, Tesla is your leader. Numero uno on the rankings, so we took that relative strength, we took that good market, we bought that on the 2-day squeeze. Right, and that, of course, made for a great move here on Tesla, took our profit, and then, little back and forth, all the chop. And then came, I think, our next trade here on what would have been that 2-hour squeeze back here on December. That would have been December 12th. So 2-hour squeeze, green arrow, all the triggers. And then rankings-wise, back on December 12th, Tesla was what? Before the weekend, relative strength, strongest name down here in the Big 10 basket. We took that theme of relative strength, jumped in, bought that 2-hour squeeze, caught the path in the 500, and then we were done with it. And then ever since that trade, the theme changed pretty much here for Tesla on what candle. Right, caught our pop, took our profit, and while we're waiting for the next big move here on Tesla, the candle here from what would have been December 29th. What happens here on December 29th? We checked the rankings and the theme changed. No longer is Tesla your strongest name here on the board. Now you're down here a bit more neutral, 38%. At that point, we haven't touched Tesla ever since. So point being, you want to follow that theme. That theme can change. Depending on the market, can all change very quickly. So be in rhythm with that. And the current theme we've had here, which is a big one, and you guys will see this going back to the first session here of the year. The theme being the strongest stocks don't matter. And what I mean by matter is just market weighting. They can't... What kind of things take indexes, S&P's QQQ back to all-time highs? Big tech names, big chips, Mag 7, Big 10. Not so much your energy names, industrials, biotech, healthcare. The theme we've had here pretty much all year, and even going back to November, December, market weighting-wise, the strongest names do not matter. They have not mattered. In the weakest names, they really, really matter. So the names that matter are, to me, the Big 10 basket. And, here's our rankings from January 2nd. To me, that's already a warning sign. Look at that divergence. Indices at a collective 38%. But it comes from what? Dow Jones, RSP, S&Ps, not the QQQ. The Qs are actually down here in last place. We take a look at the sectors, they're overall pretty good, 34%. But that comes from what? A lot of things that market weighting-wise don't matter. Materials, industrials, energy, and look, you can find some great trades there. They're not going to take the S&Ps back to all-time highs. Healthcare, silver, financials, so a lack of leadership, a lack of relative strength, where I think you really got to get it most for a good, strong, sustainable market. We then fast forward here to middle of January, January 14th, and now an even bigger divergence. The Big 10 basket in -5. And even though the indices look pretty good, it's all RSP, IWM, Dow Jones, QQQ, again down here in last place. Sector leadership, silver, energy, gold, industrials, materials, biotech. And then you have the big tech ETF XLK down here at 13%. Big 10 and -5. And now here we are a little bit through February 5th, and our current rankings are an overall rating of market neutral. Indices are softening up a bit here. They're only at 16%. But break that down. The QQQ a negative 33. The S&P's a negative 9. Look at that divergence between the RSP and the SPY. The SPY is the weighted S&Ps, the RSP is the equal weighted S&Ps. The RSP is a positive 70, very bullish. The weighted basket, the SPY, a negative 9. So why is that? You got things out there pumping up the RSP like XLP, energy, industrials, materials, real estate. Not the things that matter. And now they're having a bigger negative impact on the overall market. Indices at a neutral 16, the sectors at a neutral 16, and the Big 10 basket at a negative 12. So that all makes in the short term no bueno for the upside. And again, I think even here in the normal context of normal weekly squeeze chop, we could very easily work our way down to 24K NQ. I don't think you take that and blindly get short and go and do all that, so to say. But like I showed you, the idea of you wait for a little break in the action, you find your 30-minute, 1-hour squeeze, get short near a 21 EMA, keep the risk nice and tight, profit on the flush. That I think can make for a good trade all the way down to wherever we find the bottom, and then hey, maybe if Amazon is up, 50% tomorrow, the Qs will pop, the S&Ps will pop, and all will be peachy. But that is the short-term scoop here, guys. Bigger time frames are not what I would call bad or bearish, but they have reached a point of momentum exhaustion, and that happens on the S&Ps, happening on the QQQ. It happened a while back on Nvidia, Broadcom. That can make for, in the short term, a lot of ugly chop, volatility, a bit more downside, and then we figure out down the road, do we take these squeezes, break them long, break them short, and that'll be the fun part. Until then, I am in day trade mode, watching the futures, and we'll see what's up here throughout the remainder of the week. Adios, guys.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.